Am I in a hot air balloon? No, I am actually in a condo that I just bought. And in this video, I want to share with you how to use something called tax-aware borrowing to actually use crypto to offset some of your expenses that you maybe have on your primary or your secondary residence. So what am I talking about? Let me show you the entire situation. So I live in a different condo, okay? And I actually just bought this one with cash to have my mom move into. So I'm moving my mom down here we're in Miami, Florida. She's moving down from Columbus, Ohio. And what I did is I closed on cash. Now I'm going to actually finance it because really intelligent people and wealthy people, they understand two things very, very well. They understand debt and taxes. You've got to understand that game if you want to be wealthy. So what I'm doing is I'm financing here in about 45 days. I'm going to pull 85% loan to value out of this property. And then I'll be financing 85% of this condo, okay? Now that's gonna cost just over $30,000 a year in interest expense. So how can I actually offset that interest expense that I'm gonna be paying from the interest from the mortgage that I have on this condo? Well, if you refinance, you take that money out that you just pulled back out of the property and you put that into an investment that produces income, you can use that income to offset the interest expense from the mortgage that you just put onto the condo or the house or whatever. And you can do this on your primary or your secondary house. And obviously you want to consult with a tax advisor and a CPA and all that stuff because number one, this isn't financial advice. I'm just letting you know what I'm doing. But number two, there could be variables in your situation that maybe are different, okay? But I can use income from investments to offset the expense of this mortgage. Now you're probably asking, well, how are you producing income investments? There's obviously multiple ways. If you work with a financial advisor, they can create a portfolio for you to have income from. In my circumstance, we actually own a mining facility up north. So what I am doing is I'm pulling my cash out of this mortgage and then I'm gonna buy a bunch of mining equipment that produces income, and then I'll use that income to offset the interest expense. So one of the mining equipment one of the miners that we actually buy, we mine for Cadena. So the coin is KDA, and it produces over $43,000 a year in income. So literally I can buy one of those miners and that'll offset all of the interest expense for the entire year of this property. And that's just one miner, and I'll probably buy about like 10 of those miners and have those rolling. And then let's say I want to take, the other half of that and put that into an investment account at the bank that I'm taking the mortgage through, okay? I can then take the other half of that. So I've got those 10 miners running. That's awesome. That's like, for almost $500,000 a year in income from that. And I can use some of that to offset this mortgage expense, but I can also take the other, let's say it's another $500,000 or whatever it is. I put it into investments at the bank, okay? And I have it, and this could be in any brokerage account. I used to use Schwab quite a lot and love Charles Schwab. But you can take so you can buy, some securities. Let's say if you're working with a financial advisor, they can set you up with like an income producing, brokerage account that's primarily based in securities that pay, good dividends or whatever they're going to have you invest in. Okay. Then you can have those assets likely appreciating over time, producing income. You can take another loan against that called a securities backed line of credit, also called an SBL loan. It depends, your brokerage maybe has a specific name for it. I think, Schwab is like pledged asset line is what it's called. And you can take about 80% loan to value. So if you had 500K in there, you could take 400K out and then use that 400K, and I could go buy another property. I could go buy more miners. I could go start a business. I could do all these things. And then I can that interest rate is actually really low too. It's usually between like 1.5% and like 4%. And then I can offset that interest expense against other pieces of income from that other investment that I made. And then that's just the power of that. And like what I just shared with you, just if I did it once, let's say I don't even take another loan and I just take a loan on this mortgage, that right there is saving me about $15,000 a year, because let's say that one miner is producing 43,000, it's offsetting over $30,000 a year in interest expense. So now my taxable income is lower by about 40 or by about $30,000. So let's say I'm taxed at a 50% rate. Okay, I'm saving about $15,000 a year right there, just from understanding tax aware borrowing and understanding that I can use my primary or secondary residence and take a loan against it in the form of a mortgage. And then as long as I'm pulling that money back out and then investing into income producing investments, using that income to offset the interest expense of that mortgage, that's how you can save tens of thousands of dollars. Maybe you're not, talking these big of numbers yet. You can definitely do that if you start to understand this game of debt and taxes. That's what the wealthiest people in the world understand. They understand how to use debt and taxes to their advantage. So I could turn that, $1 million. A lot of people will listen to Dave Ramsey and they would have just bought this, they would have saved for 40 years and just bought this condo with cash. And then guess what happens? Nothing. All they have is appreciation. They don't even have income. Maybe they rent it out and they have a little bit of income. But if you understand that this rule, what I'm talking about, you're taking an actual mortgage. I'm getting 85% loan to value out of this property. Then I'm taking that money and I'm putting it in income producing assets that are also appreciating. And then I can also lend against some of that if I wanted to make further investments, or I could go acquire another property and take some good debt against that as well. And how I classify good debt is when the income from whatever investment you're making is exceeding the cost of the debt, so the cost of the money. So if you're making 10% a year and you're paying 3% a year, well, that 3% a year that you're paying in interest expense, that's good debt because you're making money on that. And that's the power of leverage. The person that would have just put $1 million into this condo, guess what? They would not have what I'm talking about. I can have about 3 times as much exposure to investments and appreciation and income because I'm understanding this power of leverage. So there's 4 things really that you want to know about debt and taxes that are really, really powerful. Number 1, if you're having someone else take the risk, which in the form of a bank or an institution or a private lender, okay, they're taking the risk on the investment, okay, because they are paying for the majority of whatever it is. If you're starting a business, if it's an SBA loan, if it's a mortgage on a property, if you're raising money from a venture capitalist, like, let them take the risk. Lower your own risk and let them take the risk, okay? They have some upside because they're getting paid a little bit of money, but you have the upside of having likely a lot of the appreciation depending on how you, or appreciation depending on how you're structuring the deal. So number 1, you're reducing your risk by having someone else. Number 2, you can use the simple rule of debt is non-taxable. So it's not income. So when I pull that money out and I refinance, all of that money that I'm pulling out, let's say it's 900 grand, that 900 grand is not income. So that's another thing that a lot of people don't understand. Okay, when I pull debt against things, that is not income. I'm not paying tax on that income. If you go buy Bitcoin and you take a loan against, on Nexo, and you pull out 25% of the amount of Bitcoin that you own, that money that you're pulling out is not a taxable event, okay? Because that is not classified as income because it is debt, okay? So debt is non-taxable. The third thing is the interest is a write-off. You just heard me talk about how this is gonna save me about $15,000 a year. Just telling you what I'm talking about with offsetting the interest expense. That's because the interest on debt can be a write-off if you structure it correctly. Okay, so number 1, you reduce your risk. Number 2, you're able to use debt and not pay income tax from it because debt is non-taxable. And number 3, the interest is a write-off. And number 4 is you can grow and scale much, much quicker, okay? Like I just mentioned, this $1 million, this could have been $1 million that was just sitting in this condo. Now I can turn this $1 million into $3 million. And then I can have all of the appreciation from those investments. If depending on what I'm investing in this case, mining equipment and some of this property, I can then depreciate those things. And oftentimes the mining equipment appreciates, by the way, when the coin goes up in value, and I'm only mining for coins that I actually believe in long term. So I'm likely gonna have appreciation there. You can also accelerate depreciation as well to further limit your tax liability on capital gains or earned income that you have throughout the year. And then I'm able to grow way, way quicker. And that's what people do not understand and don't comprehend. They think all debt is bad because they were told from the traditional education system, from their family, from their friends, from Dave Ramsey, but they never take the time to understand that debt is actually the billionaire's secret. And that's how billionaires get to become billionaires, and then hectamillionaires become billionaires because they can use the form of leverage to grow and scale way quicker. They have all the tax benefits. They also can write off the interest expenses, save money, and they're limiting their liability. Okay, so anyways, if you want to get involved and mine with us, we run a program called CIA. It's actually a new program. We have like 140 people in there. And it is probably going to be the most important program that I am ever a part of because it's super powerful. It's all about creating income with blockchain technology. I think it's echoing in here, so I'll go out here again. So we run these things called validator nodes, which is on proof of stake blockchains, and then we run, mining equipment, which is on proof of work blockchains. So it's all about creating income that's done for you so that you don't actually have to maintain all that stuff. You just make an investment and it pays you over time, okay? So if you want information on that, there's a link in the description below. And the last thing I'll say is I would attribute a lot of my success to meeting the right people at the right times and getting around the right environment. And one of the first times I ever got in the right environment, because I was if you guys know my story, I was hanging around with not a bunch of great people because I just fostered that type of environment from what I was doing below the age of 25, okay? And I got to a place where I had to completely change my life. And the way that I did that was from changing my environment, so the people, places, and things around me. And one of the most powerful things I did was I went to this event in Atlanta, and I met some of the people there that we did a little bit of business together. We ended up moving moving together to San Diego. We then further scaled our own ventures, and we learned a ton of stuff from each other. And then we all moved here collectively to Miami, and we're living separately now. But we're all, making multiple seven figures and living a really great life. And that happened because we invested into ourselves. So to learn information, we also took massive action. We all worked very, very hard to get to where we're at. So I'm not saying that this game is easy. And then number three, we created the right environment by actually, spending the time to go intentionally, go find the right people. And you can do that too if you're willing to do what I just said, which is go to events. So we have an event called InvestorCon that's on June 3rd this year, right here in Miami. You can't see it here, but there's a yacht that's right around the corner here called the Seafair. It's like a 5-story yacht. That's the yacht that we rented last year. We had almost 300 people on this yacht. It was like 130 grand. We don't do things small, 130 grand for like 4 hours. And it was an epic time. And people that met there, they created businesses together. They learned a lot of obviously valuable information. They had a great experience. It was a really, really great event. And we're having a second one, so InvestorCon 2.0 this year on June 3rd through the 5th right here in Miami in one of the most epic hotels called the Guitar Hotel that is just north of Miami, kind of towards Fort Lauderdale. So there's going to be 300 people there. It's limited to 300 because we don't have any more capacity because of the room that we rented out. We also have holding our investors. We own a few different hedge funds, so we're having an investor shareholder meeting on Sunday after the event. So if you're a current Orchid Capital investor, make sure to pre-register for that. And then we're having a pool party and stuff the day after the event as well. So we'd love to see you there. I know that you will get value from the connections because everyone, they're all investors, they're all entrepreneurs, or they're all pushing and moving in that direction. So everyone's not, an 8-figure entrepreneur. There are a lot of wealthy people that come to our events, I can tell you that. And there's also some people that are just ready to go meet the right people. And so if you're any of those and you have a desire to meet the right people, learn the right information, and be in an epic, nice city, there's a link in the description below. It's June 3rd through the 5th. I want to see you there. Again, limited to 300 people, so don't wait to get a ticket. And I'm gonna stop rambling for you. Hope you got some value from this video. If you did, just let me know by leaving a comment and hitting the like button. And if you haven't subscribed yet, why not hit subscribe? It's completely free. We're not gonna slow down, and I want you to get the best information as quick as possible. All right, hope to see you on this next video.